Treasury bills market witnessed a wide bid-ask spread as trades thin out on the 2025 papers. Analysts at Access Bank say that they expect investors to continue to cherry-pick high-yielding papers. Dimeji Obasa, a fixed income dealer at Access Bank, joins me now for a midweek market review. Thank you so much for your time, Dimeji. And let's get an update on what's been playing out in the market this week so far.
Good afternoon. Thank you for having me. What we've seen in the market so far this week has been mixed sentiments. While we've seen on the shorter end of the curve some buying, particularly on the mid-tenured securities. So a lot of the January and December papers have been in high demand at discount rates that are even higher than the one-year papers. On the bond side, we've also seen demand. This is as a result of the DMO reducing the amount on offer on one of the bonds that will be offered at the August auction next week. So that has caused some bullish sentiments to come into the markets, and we've seen that particular bond, which is the 2033, trade about 70 basis points from last week.
I can imagine it's not a lot there, but let's get to the issue of liquidity here. I understand that the market opened at a repo of about 500 billion.
Yes. So we've seen a significant reduction in market liquidity. It's typically stemmed mostly from the FX auction that was organized by the CBN. So after that debate, sort of took a lot of liquidity out of the system, which that has not yet come back in. But we expect that once the federal allocations credit starts to come in later in the month, it's going to pump more liquidity back into the system. So we should, at the very least, get back in the black.
Yeah, but on the T-bills and bonds, I'd like you to speak more on what we're seeing in terms of secondary market activity.
Secondary market activity has been bullish across the Treasury bills and bonds. On the Treasury bill side, the bullish sentiment is not across the curve. It is for specific instruments like the January and December bills. We're seeing those be the most sought-after bills, trading at around 23%. Also, we've seen the OMO papers be sought after by the internationals. We are seeing those bills trade around 24% discount. On the bond side, we continue to see demand for some of the on-the-run bonds, specifically the Nigeria 2033 bond. Again, because of a potential reduction in supply of that bond, we've seen market participants trade that bond from as high as 22.4% early last week. And opening this week was even around 21.9%. And we've seen the market trade it to as low as 21.7% currently.
All right, let's get to your outlook for next week then, with that August bond auction coming up there. What are your expectations and how are investors positioning?
Our expectations are that the bond would be oversubscribed, with the bulk of the subscription skewed towards the 2033 bond. Just as a recap, we would have 3 bonds on offer, the 29, 31, and 33. We expect that bulk of market interest will be on the 2033 bond. We expect that bond to close somewhere in between 21.5 and 22%, or in between around, say, if I were to put a figure to it, it'd probably be around 21.75. For the 31, our expectation would be around the high 20% levels in terms of yield. So we do expect that auction to be a successful one for the DMO. We expect it to be oversubscribed, and we subsequently would predict that we would have a post-auction rally afterwards.
Okay, but let's get to inflation then and your expectations then, and also looking at the fact that we're still in a higher interest rate environment. I'd like to get your overall assessment of the third quarter of the year.
For as far as inflation goes, the overall sentiment or overall expectation is that we expect that inflation would start to taper off towards the end of the year. We're starting to see a reduction in prices for some specific staple items, as some of them start to come into season. That's on the food inflation side. As far as the general high interest rate environment goes, we do not expect that the CBN will be willing to cut rates anytime soon, not in the last quarter of the year. So we probably would expect that rates in the money market side as well as general interest rates would remain at the levels that they are currently to the end of the year.
Yeah, because I'm looking at Ghana's headline inflation that just came out now. We're seeing that down about 190 basis points there to 20.9%. Do you think we'll see a similar kind of decline for Nigeria?
We don't expect that significant, that much of a significant decline. Our focus will be about between a 25 to 50 basis points reduction in inflation. Yes.
All right, then. Thank you so much for your time. The Dimeji Obasa, fixed income dealer at Access Bank.